Okay. All right. Well, hello everyone. I'm Benjamin Ittah from Hashdex. Very pleased to have you today for the first session of a series of 3 educational webinars we are providing to our European audience by the year end. We believe that in the current context, discussing education in crypto assets is a good timing. So today I have on this call with me Dramane, who is our head of product in the US, but also in Europe. And on this first session, we are going to, look at very basic thing around, the concept and the investment case for crypto. And on the next 2 sessions, we'll go more in depth about use case, but also about the valuation for these assets, and then discussing about the current investment opportunity and provide more, more of our views. But first thing first. So today, we're going to talk about the concept. Prior to that, I'm just going to read one compliance disclaimer. And the disclaimer is, all right, so this webinar and its corresponding presentation are for informational purposes only. This presentation is not an offer to buy or sell, nor it is a solicitation or an offer to buy or sell. Certain information contained herein constitutes forward-looking statements due to various risks and uncertainties. Actual events or results and the performance of the products may be substantially different from those reflected or complemented in such forward-looking statements. So today we are going to talk for 30 minutes, and then you can put your question in the Q&A button at the bottom of your screen, and we will cover this at the end of this call. But as a way of introduction, Dramane, if you can go maybe to the first graph. We like to start this call, with the fact that, okay, Bitcoin is the mother of, these crypto assets that are using, the blockchain technology. It has been created post the great financial crisis in early 2009. So, meaning that, this technology has an objective to probably solve, issues we had in the financial markets that are, centralized markets. But the point I want to make is that each technology, take a lot of time to emerge, first of all, and then it take a lot of time to be adopted, right? I'm sure you all heard that internet was used for military reason, 20 years before everyone in this planet start to hear about the internet. And I think for Bitcoin is the same. Bitcoin is a consequence of many years of research around, game theory in mathematics, but also about cryptographic technology. So that's, just a way to introduce how it all started. And at Hashdex, there's something that is part of our positioning, is the fact that we think that crypto is more than Bitcoin. But in order to help you demystifying what we mean, maybe the first question I have for you, Dramane, is what does this term crypto refer to? As we hear a lot about some crypto concept, but please help us understanding what this word means.
Thanks, Ben, and thanks to everyone that took the time to be with us today for this session. So yeah, Ben, as you said, I think technology disruption, doesn't happen in a vacuum. And in a way, what we're seeing today with blockchain, with crypto, is just the result of so many years of innovation. But it's part of this digital transformation trends that we've witnessed over the past, call it 60 years now, right? First, everything was offline. That's the time of your large IBM computer that is in isolation. But the moment with internet that we could put them in a network, that changed everything. And that was, in the 80s and the 90s, when we could do that. And that's the web one, which is the web of read only, pretty much, where you would go on bulletin board just to consume information that is online for you. But very quickly we understood that we could do more than read with internet. We could read and write. And what the write means is, that you could have interaction with people. and that these interaction with people actually added value. And that's what, companies such as Facebook, Google, Amazon, Wikipedia, and all these companies, they were built on this concept of building platform where people not only read, but they also contribute. And a lot of the value that is created for these companies actually come from this user-generated content. And the fact that I'm only on Facebook because 50, 100, 200 of my clients are on Facebook. So a part of the value of these Web2 platforms are coming from the user being there, number one. And number two, they are coming from the content that the user is creating. And these companies, they are worth trillions of dollars monetizing this. But you as a user, you don't get paid anything out of it. And worse, you could actually even lose access to what you've created. And I think that sort of what lead us to the Web3, where you can still read and write, but now you can own what is on this platform. And that's really, really, really powerful because, ownership of something gives you very different incentive than when you are just using it. And the idea is now that we can, we can do pretty much everything that we want online. We can shop online, we can literally live online. The last step is if we can own things online as well, which is essentially either because we can settle a transaction 100% online without having to sort of go back to, our bank account and all that, or because you can transfer to me the ownership of something 100% online, and I know for sure that you were the owner and you have the right to sell that to me. So the concept of being able to own something online is massive and will be disruptive to a lot of companies and a lot of the industries that were built during the Web2 area, because I think it will have a lot of impact on the centralized platform, but also just change the way we think about ownership generally in a digital age, because I think the ownership part is the one thing that is still missing from the online world that we're spending so much time on so far. But good thing is we've been doing this. Crypto's been around for 15 years now, and it's gotten a lot of traction, and a lot of interesting things have been built. So before we get further down the rabbit hole, it's always just with sort of taking a step back and thinking about the core concept that what we're talking about here. What a blockchain is, it's an open database with shared ownership, and it's an open computing platform, so everybody can access it. And because it's open, it's decentralized. If 1 or 2 or 3 or 500 people go down, the network can still operate. And because it's open, it's censorship resistant, and it's also transparent, i.e. we have the access to the whole history of what happened. And that concept of decentralization and transparency is very powerful, and it's in itself a huge difference to what we know from the Web2 area. The second concept that is really cool when we're talking about crypto at large is the concept of smart contract. And it's the idea that once you have this blockchain, this decentralized computing platform, you can now write program on top of them that could execute directly, that could run software and execute directly. And basically, that also gives rise to the concept of programmable money. What if we could now program our money and have it do certain things that had to be done manually by people before? So the smart contract just help create all this ecosystem of what is being called decentralized application and being able to program money 100% online. And the third bit is, cryptocurrencies and the concept of cryptocurrencies and, the tokens that we talk about. So basically, all of the blockchain, on all of the blockchain, you need a way of transferring value within user of that ecosystem. So each of the blockchain would have its own native token, and the token is the way in which you can transfer value within that ecosystem. The token is also the way in which you can use the system. If you want to use the Ethereum computing platform, you need some Ethereum to be able to run your code on the Ethereum platform. So the token enables you to use it. But the token also in certain cases enable you to be part of the governance decision. So that's also very important and really, really cool, because you're using a system and you're also able to influence the governance of the system. And the last bit is on the NFTs, which are also token, but now each of the tokens are unique. And they've been one of the most interesting and hot topic, because that's where a lot of large companies, being in music or in entertainment or in luxury, they see a lot of potential in the NFT, because literally, if you can show the ownership of the things that you have in real life, if it's your car or if it's your wallet or if it's your watch, if you can show that online, there's a lot of interesting application that can be built around NFTs online that we think will sort of materialize over time. So these are the 4 core concepts when we're talking about blockchain and token. And lastly, to bring it back home, it's one way to think about the potential of crypto is that the main goal is to disintermediate the how trust building used to happen. So the goal of crypto will be to remove all the intermediaries that we ever had to rely on in the traditional financial system, or in the traditional system. We need intermediaries to do almost anything, being banks, being asset management companies, being law firms, because these are the folks that give the stamp of approval. So the trust was coming from the brand of this institution or the fact that they were regulated. But now comes crypto, and now what we're saying is we could actually build another way of trusting a system, and the trust will come from the fact that it's a decentralized system and it's enforced by cryptography. So we know it's almost impossible to commit fraud. And the people that are participating, they are doing it because it's in their own interest, because they have an incentive to do so. So now you can build a system between users, developers, investors, validators, and all that, where it works because people are incentivized to make it work. It works because the rule of engagement are in the code, and the code is transparent, right? So I think that's a very interesting concept of moving trust from institution that charge you a fees because they are facilitating that trust to a system. And because it moved to a system now, you don't have to pay all that much because it's no longer a monopoly. It can be a fee that you pay to access the system. And that, when you think about it that way, you can see that the potential of crypto as a whole is basically whatever you have an intermediary, they could be disrupted by crypto, because now we can write the rule of engagement in the code instead of it being safeguarded by people. So the potential is in the scope of the market caps of all the banks, insurance companies, payment companies, social media platform, and all that. So crypto would be a portion of all this combined, because these are the folks that will be disrupted if crypto is successful.
So now that we have some elements for the theory of crypto, we live in a world where we use a lot of different services. So why this technology matter in the service that we use? Maybe we can look at highlights of some use cases.
Yeah, no, sure. But, we can take few examples, because I think a lot of the conversation is usually around speculation this, speculation that, and I think sometimes people don't appreciate how much innovation has happened and is happening today, right? And we can look at them across different verticals. The first one is on payment. Everyone that has ever had to do an international payment knows it takes days, sometimes weeks, to move money around. Or if you're using credit card, even if the payment is done at the moment for you, the merchant sometimes has to wait a month to get the payment. That's the whole cycle of it. Now comes, Bitcoin or stable coin, where you could literally send money to anybody, anywhere in the world. And the only thing that the person needs to receive your money is a crypto wallet. And sometimes people have built extensions that are such that you don't even need a crypto wallet. The money can go directly in your mobile money account, for instance. And that is a transaction that can be settled within 1 hour and cost less in many cases than a conventional transaction. So on the payment vertical, which is at the cornerstone of how the world works, crypto-based payment rails are faster, are cheaper than most of the legacy options. So, you know, they have that technical advantage. They have that utility advantage. Now, the only challenge is adoption, for instance. But on the payment side, you have that as you know, as a proven point. The second vertical is around finance. It has been so many interesting innovation in crypto around finance, around the concept of what they call decentralized finance. The idea being, you know, you can perform the role of the finance company without needing a finance company in between. And Aave, for instance, is a very good example of that. Aave is a decentralized lending platform. What they do is you come to Aave because you want to borrow money, for instance. And what Aave will take as collateral, Aave will take, you know, something as a collateral from you. So you have to give the crypto asset as collateral. You can give, let's say, Bitcoin, and you want to borrow USD from Aave. So Aave take your collateral and source that USD liquidity from all the community. So people pull money together and Aave lend you that money. But the beautiful thing here is the money is lent to you according to certain risk criteria that has been agreed upon by the community. So it's almost like it's a bank, but the risk criteria are agreed upon by the bank, by the community. So it's transparent. So you as the lender, you have way more comfort in the bank that is transparent. That's the first thing. And the second thing is, because it's done 100% online, let's say if the loan has a loan to value ratio of, like, you know, if the loan requires 50% over collateralization, the moment that the market goes below that, the loan is 100% liquidated. And that's a beautiful thing with the smart contract, right? The rules are clear, they are written, and they're not going to change. So you also have that transparency and that efficiency in the way it works. So it's basically Aave is providing the service that the bank would have provided, but without the bank in between. What that leads to is that both the lender and both the borrower are better off because there's less intermediation and there's a better understanding of the risk that is there. Aave works well. There's been billions and billions of dollars originated on Aave, and we know that it works well. The next step would be to sort of extend Aave now to the real world, where we will be competing against the like of JP Morgan or, you know, all the banks, the commercial banks that you know of. And the same thing is also happening on the exchange side with Uniswap, which is building a decentralized exchange that works the same way as an IZ or a Euronext works, for instance, but without the ONX in the middle. And that's really, really beautiful. And we also have other use cases outside finance and payment. Filecoin, for instance, enable you to monetize the storage space that you have on your computer that you are not using. It's something that you cannot monetize today, but through Filecoin, you could monetize it. So they are creating a new market. And because they are creating a new market for people to monetize something new, something that has value, you know, you can understand why Filecoin could charge a fee for the service that they're providing, because they're adding value to the end user. And the same thing with Audius. Audius is building a platform where they're putting directly in touch the content producer and the user, and removing all the value chain of, you know, the content creation, all the music industry, all the producer and all that. And because they are removing all these intermediaries, they can be number one, as a content creator, you have more control over your content. You get more for what you put out there, and you actually have like a closer relationship to your user as well. So I think that's really how a world without centralization is shaping up. And I think it's actually more mature than a lot of people think. And it's not just Bitcoin. It's not just Ethereum. It's broader than that, actually.
Mm-hmm. So if you go to the next slide, I think, you know, we touch base on, you know, the theory of the crypto technologies. We touch base on some, you know, concrete use cases. But I think it's really important to, you know, to define and make it clear. You know, a lot of these tokens have different usage, right? There's some of them are just used, you know, to transfer some value. So we can call them, you know, currencies. Obviously, this is, you know, the biggest part of the crypto market that is still relatively small today, you know, compared to others. And then maybe, if you can, go beyond that and explain the different sectors or family that we see, especially, when it comes to the infrastructure layer of these technologies.
Sure, Ben. Yeah, so I mean, look, if you invest in crypto and you only invest in Bitcoin, you're investing in 50% of the market. So there's another 50% of the market that you don't have exposure to. And that's something that we talk a lot about, which is crypto is broader than just Bitcoin. And the way we like to think about it is by different themes. Theme being crypto token that perform the same role. And the largest family to date is, on the currency side, largely driven by Bitcoin. But these will be cryptocurrencies that people use to transfer value or, as a way of saving. And as we talked about before in the slide above, it's like Bitcoin right now or Stellar right now, many of these currencies, cryptocurrencies, are way more efficient than the existing financial rails. But as currencies, their value would be driven by supply and demand and by the utility of these currencies. So they would have very different behaviors and very different approach to valuation to smart contract, for instance, because smart contracts are basically their computing platform. They are platform that you can write your application on and execute. The beauty with them is because again it's an open blockchain. By running your code on them, you have access to millions of potential users that can just plug in and start using your system from day one. It started with Ethereum, that was the foundational smart contract platform. But after that, you have the Polkadot, you have Solana, you have Avalanche, Algorand. So there's like many other smart contract platforms that have been launched over the past 7 or 8 years. And it's really, it's a foundational part of the whole basis because basically the smart contract are the utilities there. So they are the pipes of the whole crypto ecosystem. And they are the pipe on which everything else, all the other applications are built, essentially. And, as you would understand, the way you invest in a currency is very different from the way you would invest in a smart contract or in a utility sort of play. And that's a nuance that is important to just keep in mind. The third bit is stablecoin, and these are basically crypto assets that are backed by either a commodity or they are backed by a currency. Most of them are actually backed by currency, and they are largely used as a way of transferring value. So it's like if you take USD Circle for instance, which is just one of the most used stablecoin. It's highly regulated because the company is in the US, and there's so many companies right now in Africa or in emerging market that would rather receive payment in USDC because they get them faster, and once they get them, they can use them to do many more things than if the money were going on the bank account. But that's also huge, and stablecoin would definitely be the way in which the crypto sort of displace the traditional payment companies, being PayPal, Visa, or MasterCard. And you have the application layers. And some of the most mature application are the decentralized finance one, DeFi, right? And they are essentially financial institution, right? If you're looking at Uniswap is an exchange that charges you for taking liquidity from it. So if you use the platform, they charge you 0.3 basis point, and that's how they make money. So if you think about Uniswap, you could think about it the same way as we think about an exchange, because that's how they make their money. Same with Aave. Aave enable people to lend and borrow, and they charge a commission on the transaction that they are facilitating. So these DeFi platforms look very similar to financial institutions in the way you will analyze them. And some of them even produce financial statement, income statement and all that. And it's very, very interesting. And again, the analysis of a DeFi platform will be very different from the analysis of a stable coin or a smart contract. And lastly, you have all the metaverse and tokenization sort of play, all the other bits that make the crypto ecosystem run. So, I mean, I'll stop here, but the broad the broad idea here is just sort of show you all the nuances that there is to investing in crypto. Investing in crypto is more than just investing in Bitcoin, but it's also more than just investing in cryptocurrencies or in smart contracts, right? If you're thinking about investing in crypto, you should, be very deliberate about how do I get a broad exposure to all of this asset class? Because remember, right, 8 years ago, smart contract platform were at zero because you had no smart contract platform. But today it's 330 billion, right? And that's what is at stake with crypto, which is, in 4 or 5 years, 100 or 500 billion worth of value can be created. And that's, you really need to think broadly when it comes to crypto. Ben.
Dramane, look, I have a good question for you. And I'm trying to place myself as someone who is far from that industry. Okay, we see a technology here. Kind of revolution, right? We see some concrete decentralized application. For example, you mentioned like listening to streaming without using Apple Music or Spotify and go through a blockchain, where you're directly connected to the artist. But sometimes I think for traditional people, this concept can be really far ahead. So we heard a lot about tokenization recently, and I think this application is a good way to bridge the real world to this technology. So can you maybe, detail a bit, what is tokenization? What can it bring? What's the opportunity there? And then we'll go maybe for the investment case for crypto.
Sure, Ben. So I think, tokenization has definitely been one of the hot topics, especially coming from, the institutional players, right? The idea being, if all the things that we said about crypto are true, i.e., you can create digital assets that are easy to trade and that could trade 24/7 without anyone else being involved. That's beautiful. What if we could use the same technology to also create digital assets of the physical assets? So, creating digital token of real estates or commodities of, and all that. And because now you have the digital token and they are on blockchain, they become more liquid and easy to trade, right? And I think that's been top of mind for all the large finance companies because they really understand that being able to tokenize, that tokenization could be the next thing when it comes to financial infrastructure, the way we create share, the way we represent ownership, and the way that ownership trade. And because they are created on open blockchain, you can most definitely sort of break them, create fraction of them at almost at the infinite, right? And because they're also on open blockchain, a lot of people can start building application on top of it. Like, imagine today if your ETF, the ETF that you have in your brokerage account, if could use that as a collateral to borrow for something else, without even having to go through 5 layers of approval of your brokerage firm, if at all they would even allow it. That's a beautiful thing. If it's tokenized, if it's on open blockchain, someone could write a code that would use your asset as collateral and offer you another service. So I think that's a beautiful thing. So the potential is, is expressed in the trillions, right? I think in the next 5 to 15 years, people estimate that about 16 trillion assets could be tokenized. That's about that's 15% of all the assets under management by large finance companies. And I think that's gonna be really, really tremendous in terms of what can happen. And to close with this, one of the things that the BlackRock CEO, when he was one of the first time when he talked about blockchain was under the angle of tokenization, because they were like, listen, the tokenization of asset and security could be the next frontier for finance, literally. And we'll take his word on that because he knows one thing or two about financial market.
Hey, Dramane, thank you very much. So maybe if you go to the next slide, I think, if you read through the line on all the things that we are saying, this is still very early stage, for this technology, and maybe, for the next stage of the internet, right? Let's keep in mind that with the internet, we digitalize the transfer of information, and what crypto can bring is the digitalization of transfer of value. So, we like to do some some comparison with the internet adoption, and it feels like we are still in 1998, where there are some infrastructure technologies that are here, but we don't really know and understand how we're going to use them, right? If you think about the internet, 25 years ago, I'm pretty sure that all the things that we do on a daily basis were not something we would think about. So that's currently where we are. A lot of good infrastructure technology are out there, and probably that's the best, decentralized application are still not there yet. I don't know, Dramane, if you want to compliment on that, but if so, after I would be pleased if you can, maybe highlight the different element on what we think are the case for investing in this asset class.
Yeah. Look, the one thing that I would say is if anyone here had the opportunity to go back in time and invest in technology in 1998, I'm sure we will all do the trade, right? Because in 1998, most of what we know and love internet for today was not created, or they were just being created. I think that's when Google and PayPal were being created. And I think if I'm looking at all these companies, the two that are still around in the three that are still running in any significant manner are Amazon, I want to say eBay, and I want to say Netflix. The other exists, and maybe Rakuten too, right? But largely, most of what we love internet for came after that year. And in terms of adoption, you will see that the crypto adoption and the internet user adoption follow this similar pattern, basically. And we are still in the hundreds of millions of users. We're not even at 500 million. We're not even at 1 billion. We've not built Uber yet right now. Google is just being started. So I think that's probably one of the most interesting thing about crypto right now is to be able to get exposure to a fundamental change in technology at the early stage when the pipe are just being built, and now we are waiting for all the applications that will leverage the pipe, right? So I think that connects very well to I would think about the investment case for the asset class, Ben, right? The first one is significant growth potential because, it's as we are in internet years, we are where we are in the late 90s, which would have been a great time to invest in internet because you start seeing that these things work, these things can be useful, but most of the cool thing will be built later. So that's the first item, the significant growth potential. The second item is on the supply dynamic of crypto. And it's really, I think that applies particularly to Bitcoin, whose inflation schedule, decreases by half every 4 years. I think right now the inflation rate is at 1.75%. So in few months, it will be half that. But, it's really interesting if you compare that inflation rate in Bitcoin to the inflation in the real world. We're talking about what, 5-6% in the best case. So you have an asset whose inflation rate is lower, about 400-300 basis points than the real world in itself. That's really compelling. And number two, it's that inflation is going to go smaller and smaller. While on the other side, the demand will only keep on increasing. If we are in 1998 in crypto years, like by 2 years from now, 8 years from now, we could move from 100 million users to 1 billion users. So the demand side could go up 10x, but the supply side is only going to grow 1 or 2%. So that creates a very compelling case when it comes to investment. The third thing is the investment capital, like, the smart money, the venture capitalists, they've invested billions and billions of dollars in this industry. And the companies that they've invested in, most of them are still building. They've not been able to reap the benefit of all this investment or all the company building. But we know that, the next time around, we will see this application coming to market. It's going to be very similar to what we've seen with DeFi. Before 2020, we didn't know much about DeFi, but a lot of the investment in DeFi happened in 2017, and we were able to reap the benefit in 2020. And we think the same way as well, that all the money that was invested since 2020 will come to fruition in the next bull cycle. And lastly, it has to do with all the general shift that we see when the way people think about internet. So I think there's people are fed up with centralized platforms that have too much control. And crypto, in a way, give them the opportunity of being part of, a broader movement toward more justice, more decentralization, and sort of giving the power back to the user as well. So I think these are, in broad stroke, I'll be thinking about the investment case. And as you said, we'll get to talk more about it in the follow-on session as well.
Totally. Thank you very much, Dramane. So look, everyone, that was it for today in terms of, concept and investment case. In 2 weeks, we'll go more in depth around some concrete use case from companies that you know well, that are integrating these technologies either as a service or to run their business. If you have some question, there's the Q&A button at the bottom of your window. Feel free to ask some question. If there are so far there's no question. And obviously, if you need more information around these subjects, really feel free to contact us. Hashdex has a very big focus on research and education, and we are strongly we are convinced that adoption goes through understanding of the tech that is behind of their use cases. So look, I see no question. Thank you very much for your time. See you in 2 weeks, and if anything else is needed, just reach out to us, and have a good day all, and thank you, Dramane.
Thank you everyone. Thanks, Ben. Bye-bye.
Bye-bye.